In this week's episode of the Stockscores Market Minutes, I'm going to talk about whether it is time to buy gold stocks. They've shown some life of late. Is there an opportunity? I will do my regular weekly market analysis, figure out if the weakness in the market is going to end soon. Plus, we'll look at the day trade of the week and run a market scan in search of opportunity. So, is it time to buy gold stocks? Well, inflation concerns have taken the headlines of late, and that could motivate a change in Fed policy. And many people have started to argue that it's time to buy the gold stocks. It doesn't really matter what people say. I have found the hard way that trying to be smart in the market doesn't usually work. What you really have to do is look at what people are doing with their money. And that's why each week here I always look at the charts, because the charts tell us how people are voting. They're voting with their capital, and if they're buying aggressively, then it will create the right kind of patterns that set up buy signals. So that's really what we want to look at, is if we look at the chart of gold, and I like to use the ETF GLD, if we look at that chart, is it giving us a buy signal? Let's jump to it now. Is the downward trend in gold broken? Here is the 3-year weekly chart. And you can see that we had a really nice run higher in 2019, 2020. And then we sort of topped out after the chart went parabolic. And that set up this long sort of gradual slide lower, which has a downward trend line that looks like that. As well, it's got this little upward line, which sets up a pattern called a pennant. Now, pennants are good because they have compressing volatility. You can see that there's a lot more price volatility here than there is over here. That means investors have become confident about what gold is worth in this zone here. There's not a lot of volatility, therefore the buyers and sellers agree about what gold is worth. You can also see that we're starting to tickle through that downward trend line. And if we can make a solid break out of the tip of this pennant, maybe up toward the $75 level on GLD, that would be a decent buy signal. I wouldn't say it's a hugely bullish signal because there will be some resistance up here, although with pennant patterns, the high of the pattern doesn't usually form strong resistance. But certainly gold is looking better. Is it looking good enough to make a trade in yet? I think you still got to be pretty cautious. The reason, there's not a lot of strong volume, and there's not a strong breakout from the tip of that pennant. So there's optimism building, but we still lack the enthusiasm. And I like to see the enthusiasm. That tells me that investors are clamoring to take a position in that instrument. So we'll give a cautious bit of optimism on gold, but I don't think it's time to be too excited about it just yet. All right, now let's get into this week's normal market analysis, starting off with the S&P 500. And you can see the strong weakness that we've had the last week or two. And that has broken some important support zones on the short-term chart. We've got that line right there, which was broken this week. And we've broken down from a falling top. But the more critical breakdown is here on the long-term weekly chart. There is your long-term upward trend line. We've broken that. It is not from a falling top on the weekly time frame, but it still points to likely lower prices ahead. My expectation is we will fall into this zone, which is the last support. We'll bounce back, maybe make a little sucker rally, but given that that long-term upward trend is broken, although we may stall the downward movement next week, I do think it's likely that we head lower in the weeks and months ahead. So caution warranted on the S&P. The Nasdaq 100 also fell quite sharply through the month of January, and you can see the fall there, but also the fact that we're coming into this support zone. So the market is quite oversold, and we know that because the distance from the trend line down to where prices are now is quite far. And so it's very likely that you'll see the Nasdaq stocks bounce back next week. Maybe after a week open on Monday, they'll make a little bounce back. However, we shouldn't overlook the fact that this is a breakdown of this upward trend line here, and therefore I do expect lower prices in the weeks ahead, but perhaps not the days ahead, as this support may lead to a little bounce up early next week. Caution warranted longer term. IWM broken through important support. We've talked about this for many months, how many times it just keeps bouncing off of that support zone. But this time we're breaking down from a falling top, and really the next level of support is down in here, and that's a fairly substantial pullback for the small caps. And so again, although we may make a little bounce back in the short term, consider that a bull trap, a sucker rally, as really this breakdown shows that investor confidence has been broken. Onto the Canadian markets, not as bad on the Canadian stocks. We still had the weakness Thursday and Friday, and we are approaching this short-term support, but still the trend for Canadian stocks is more or less sideways. And you can see that on the longer-term upward trend line, we're not really making that strong breakdown through support. And the difference here is the emphasis of energy and mining stocks in Canada, which are sectors that are holding up reasonably well, and that sort of defends a big part of the Canadian market. So we shouldn't be too concerned about the Canadian market, or at least not as concerned as the US side. TSX Venture is building a pessimistic pattern. You can see the falling tops in towards support. However, we have not broken that support yet. We'll keep an eye on that 850 number. If we see a break of that, we should be starting to move down toward this level. And currencies, US dollar is still in an upward trend. I can draw a little upward trend line, and we're basically right at the trend line. So still remain relatively optimistic on the US dollar. On Bitcoin, it continues to fall. I've been a bear on Bitcoin for a number of weeks here as the upward trend line was broken. We are, however, at that support. Much like the NASDAQ market, we are at that support where it should bounce in the short term. But I don't want to confuse a bounce with a reason to buy for the long term. There is no good chart pattern set up here on Bitcoin or on Ethereum, as it is also falling recent weeks. It's got pretty good downward momentum, and we may see it try to defend that trend line right there. However, no reason to be optimistic there right now. Interest rates, this is the chart of TBT, which is the inverse of the bond market. So when this goes up, interest rates are rising. We had that break of the downward trend line, which points toward higher interest rates. However, last week we actually had that pull back a little bit. It's still signaling that higher interest rates are ahead, but it's not a massive run for the door toward higher interest rates just yet. Commodities, there you see that gold chart, which we already looked at in the pennant pattern. We'll watch for a breakout of that as a signal to be a buyer of gold. Oil continues to strengthen, but it is really getting up toward the top of this channel here. And my expectation is oil will maybe stall in the short term and pull back. It's sort of due for a little bit of profit-taking pullback in the next week or two ahead. Finally, the fear chart. You can see that bump up in fear this past week as we have that volatility which comes through the VXX. And I think that signals that, yes, there's concern among traders, but we shouldn't get too enthusiastic about buying this just yet, because I do think the market has a good chance of making a little bounce up next week. Again, that sucker rally, and this would therefore pull back. So this is a great short-term vehicle for when there's market volatility, but it really is a short-term vehicle. You have to trade it with a look at the intraday charts. All right, my ratings then. I've dropped my rating on the US market to bearish on both time frames. Canadian stocks, I've kept it neutral on both time frames, and that again is because commodity stocks are holding up the Canadian market as well as banking stocks. Gold neutral, long-term, bullish short-term. Oil bullish on both time frames, although oil may be set to stall soon. Strong selling pressure in the technology stocks last week have caused the major US indexes to break their upward trends, and that sets up a high probability that there will be more weakness in the weeks ahead. However, with the markets oversold, we may see a little sucker rally early next week perhaps. No certainty that it will happen, but it usually is what happens, particularly when a market like the NASDAQ falls into support. Gold is relatively stable and building a good pattern. Oil is strong but getting a little overbought at the top of that channel, and fear has risen. All right, now let's take a look at the day trade of the week. Not a lot of day trades on a day when the markets were selling off in pretty strong force, but this is a day trader strategy signal that came late in the day, and this is a stock that actually we traded, I don't know if it was earlier this week or last week, but it's been a sort of stock of interest of late, and it started to show life late in the day on Friday, despite the market weakness, you can see it breaking from a pennant pattern with the all-important action candle. So that shows that it has alpha. The market was selling off. This stock was going up. You can see the strong volume traded. And it was a little hit and run type trade for $100 of risk, 620 shares, which was $5,530 of capital, which meant that you had to put up $1,843 in margined capital, if you like to use margin. Led to a $310 gain by the close, a 16% return on a one-day hold. All right, now we're going to jump into the market scan tool, and I've had many people ask me about market scans for short selling. And so let's use Netflix as an example of what I like to look for as short sells. And this one has already run its course, so it's not time to short this now, but I want to show you what we're watching for. So anytime you have an upward trend line and you break the upward trend line with strong force to the downside after maybe, in this case, it's sort of a double top or a little falling top right there, that's a pretty good short sell setup. And we should remember that Netflix has really performed well over the last couple of years through the COVID pandemic. Well, that was the time to short it. So you're looking for the break of an upward trend line from a falling top ideally. And you can see now the stock has, lost a huge amount of its value. Well, what do we want to scan for? Well, notice that the stock scores are still relatively high there. So we're going to say stock scores need to be greater than 50. We want higher price stocks, and then we're visually going to inspect them for a breakdown through support. So I'm going to go to the market scan and just build that. And we're going to build our own scan, a custom scan. So we're going to say we want to look for stocks that have a sentiment score greater than 50, because that means that they've probably been in an upward trend. We're going to look for higher price stocks because the small caps have been falling for months, so we don't need to focus on those. We're going to focus on the higher price stocks. We'll do those over $50, and you can mess around with that if you like. We want stocks breaking through some support. We'll say a 15-day support breakdown. So we want to go 15-day support breakdown right there. And fairly liquid stocks because it's hard to short sell stocks that aren't actively traded. So let's say they have to trade at least 10,000 times a day. Again, you can mess around with that. Let's run that scan and see how many candidates we get. Look at that, we got 100. I mean, that just shows you how much weakness there was in the market last week. So now, as we cycle through charts, we're looking for stocks that have been in long-term upward trends that have broken those upward trends. So let's look at this one first as an example. It's been in a long-term upward trend, but if I draw a line across these bottoms, I really haven't broken that line yet, right? So that's not a good candidate. So then I go to Pfizer. Now, Pfizer has been in a long-term upward trend. It made its breakdown, if I was to draw a line across the bottoms, it made that breakdown early in January. It's still relatively close to that breakdown price. It had a little bit of weakness at the end of the day. So that's a decent candidate. The issue I have with Pfizer being a short is it's going to find support right there at around $50, which was the last inflection point. So I don't know that there's enough downside to justify the short sell. Now, you may not like short selling stocks, but you can also buy put options on these things. If you buy an in-the-money put with a relatively near-dated expiry, so something that's going to expire in the next month on a put option, that's another way to trade these. By getting a in-the-money option, they generally have what's called a higher delta, which means that the amount that the option price moves is very closely related to the amount that the actual stock moves, and that's kind of what we want. So this is one way to look for shorts. Here, Alcoa, you can see it's made a pretty steep run. It's broken down on Friday from a little falling top. Again, the issue is support. It's going to find support in this zone, so the downside isn't considerable. But those are the ways I analyze these things, is look for the break of the upward trend line, and then look to see, well, how far can it fall to the next area of support. Now, keep in mind, the market's been pretty weak the last week or two, and so a lot of these things have been falling quite a bit already. But what I'm trying to do is give you something to watch for in the weeks ahead, because I think that there will be more of these things. Here's a stock that broke its upward trend line earlier in January, but that one didn't have a falling top. Now it's starting to break down from a falling top, and really its support is way down here. So this one's got a lot more downside potential. Duke Realty, decent candidate for a short sell, maybe on a little bit of strength. Moving along, I won't look at too many more of these because there's so many to look at, but Just here's another one. This is another realty stock. So there's the upward trend line. And here's now the breakdown from the falling top. That one can fall into this zone. So something to consider there as well. So that's one way to short sell. Maybe in future weeks, I'll show you other ways to set up the market scan for some short sells. Hope you've enjoyed it. And if so, click on the like button, subscribe to the channel, tell your friends, tell your enemies, and most importantly, trade well.